Hi there, welcome to Kneppy Invest. A few months ago, I did a video on Rectifier Technologies simply because of what this company does. They are in the EV space, but they don't build electric vehicles. They don't mine lithium, but they do provide equipment or stuff for electric vehicles. And to be honest with you, that is the sort of area I would be looking to invest in if I was going to invest in this high growth area. Sort of like the old adage that you don't go looking for gold, you provide the shovels to sell to people who are looking for gold. You are more likely to be successful if you do that sort of thing. Now, that does not mean Rectifier Technologies will be successful, but I think there is a higher chance this company will be successful over those lithium miners and also over a few of those electric vehicle manufacturing companies. Now, they did release the half year results, and just by the fact I am doing this video, these half year results were quite impressive. Now, this is just one half year of results, and they need to continue this momentum moving forward, but they are on the right track. And this is a potentially very exciting story on the ASX. For full disclosure purposes, before the release of the half year results, I was not a shareholder of this company, even though I was excited about the potential of this company. But upon the release of the results, I did take a small nibble. And the main reason I want to take a small position in this company is when you do, and this is probably being sort of a generalization, but when you do own a company in your portfolio, you tend to follow it a little bit more closely. And I have found that's true for myself. So if I am intrigued, excited about the potential of a company, a lot of times I will take a very small position. A lot of times it doesn't work, but a lot of times it does work. And if it does work, I'm more likely to add my position as I get further proof the company is moving along a direction I want to see the company move along. That might be what's going to happen to Rectify in the next couple of years, or it might not. And if it doesn't happen, then no big loss. But if it does happen, then I will be able to add my position and eventually have a fairly large position if this company succeeds in the ultimate goal. Before we have a look at the half year results for Rectify, I just want to go back to the financial year 22 results, just so we can compare. And this is very important. You'll see why this is very important. Now, when I did that previous video on Rectify, the share price is 4.3 cents, which is not much lower than it is now. So right now, the share price is about 4.5, 4.6 cents. And that's quite absurd when you see the half year results. Now, the market cap at 4.3 cents was 59 million, but this company had $14.8 million of revenue, and that's very important. So keep that number in mind when we have a look at the half year results. They were profitable. $492,000 of profit. Now, you might laugh at that and say it's really small, but it is profit. And they weren't burning through a lot of cash, only about $1.66 million in negative free cash flow. But still, that means because they're not burning through a lot of cash, there's a lower probability they're going to need massive capital raisings to keep the company going in the future. It doesn't mean they won't do capital raisings, but much less likely to do massive dilutive capital raisings. And this was the revenue history for Rectifier going back to 2012. I really started following this company in about 2014-15, so it's taking a long time for this company to make it. And I don't mind that happening to a company, particularly if management stay with the company through that sort of time period, because they will learn and they will grow with their business. But you can definitely see growth in revenue over the past 5 years, particularly in 2018 and 2019, revenue grew from 7 million to 18.3 million. And in financial year 22, revenue was 14.7 million. Now, I've also included here gross margins, and so this is something to keep an eye on as well. And I think there is a possibility that gross margins will increase over time. And if you see gross margins increasing over time, that's a really good sign that this company has a moat or a competitive advantage. So let's have a look at the half year results, and you understand why I'm a little bit more excited about this company, because if you compare the half year results to the financial year 22 results, there is something amazing happening with this company right now. Now, one thing I like this company to do is just increase their marketing presence out there, because when they release the half-year results, there's no presentation. No media announcement. It was just the half-year accounts. So that's one thing I like the management of this company to improve is just the marketing of how this company is performing. So they should have been shouting at the hilltop about their results because this company increased the half-year revenue from 6.5 million to 19.3 million. Yes, they had $19.3 million of revenue in this one half year. So they beat financial year 22 full year revenue by $5 million. Not only this, if they have no more revenue for the rest of the financial year, this would be a record year for Rectifier. Not only that, they were profitable by a significant amount in this half year. So $4.5 million of profit before income tax expense. And yes, they are paying taxes, which is not a bad thing. And after income tax, they had profit of 3.8 million. And if you include foreign currency translation, they had profit almost $4 million for the half year. And remember, the markup of this company is still around $60 million. Earnings per share, 0.27 cents. And if they continue on this momentum, right now, this company is dirt cheap. Not only was this company profitable, they're also operating cash flow and free cash flow positive. So $3.3 million operating cash flow positive. Not a lot of money spent in investing activities. So capital expenditure totaled $193.9 million. They repaid debt. That's the other thing. They had a bit of debt. And with this operating cash flow, they decided to repay about $2.7 million of debt. And even though they did repay that debt, they grew their cash on hand from $7.3 million to $7.9 million. Another thing I like to do, particularly for companies with a fair few divisions or segments, is just to see where the growth is coming from. And for Rectifier Technologies, they have 4 segments: electronic components, industrial power supplies, E&D, which is electricity generation, distribution, and defense; industrial power supplies, T&T, which is industrial power supplies, transport, and telecommunications; and industrial power supplies for EVs. And even though this is hard to read, and this is why I would have preferred a presentation, because in a presentation, you can put the information out there for the general market in a better to read format. So on the bottom here, we have the half-year results for financial year 22. In the top half is a half-year financial results for financial year 22. So you have to compare the numbers on the bottom to the numbers on top. For instance, in the industrial power supplies EV, they grew their revenue from 4.5 million to 15.7 million. So they almost quadrupled the revenue, we'll say tripled the revenue in that segment. In industrial power supplies T&T, they grew revenue from 314,000 to 802,000. In industrial power supplies E&D, they grew the revenue from 1.6 million to 2.6 million. And electronic components, negligible revenue and negligible revenue growth. In fact, it went backwards. So that's sort of a segment you don't really have to concentrate. But significant growth in the industrial power supplies EV, which is the manufacture and distribution of electric vehicle chargers, battery chargers, and power supplies for a number of industries. Another thing I like to see is a breakdown of their revenue by geographic regions. Does this company have a geographic reach? Are they increasing their reach across the world? And that's definitely true for Rectifier Technologies. In financial year 22, the first half, the vast majority of their revenue came from Australia. $5.4 million of their $6.5 million was from Australia. And even though the growth in Australia, the revenue growth in Australia has increased substantially from 5.4 million to 13.5 million. This company is growing throughout the rest of the world, apart from Oceania, which is probably just New Zealand. So in Asia, they grew the revenue from 792,000 to 1.3 million. North America from 272,000 to 1.1 million. South America from 16,000 to 64,000. And in Europe, from 47.9 million to 47.9 thousand to 3.3 million. So their dependency on Australia has become less in the past year. That's the main thing I have taken away from this. And they're gaining traction throughout the rest of the world, particularly in Europe. Now onto the charts for Rectifier. I'm going to show you two charts. The first one here is a daily chart going back to August 2021. The reason I wanted to go that far back is because in late 2021 and early 2022, there were a couple of really interesting announcements from this company. I mentioned those announcements in the standalone video I did for this company a few months ago. But the main feature around this company over the past few years is whenever the company releases a really positive announcement, a lot of selling comes in, which makes me think there's a lot of day traders, a lot of short-term traders in this company right now. And what they're doing is buying the rumor, selling the fact. So whenever the company releases a really good announcement, they sell, they wait for the share price to pull back, and then they start buying. We have seen this happen time and time again over the past few years. And it happened again when the company released the half-year results. The share price reached a high of 6.5 cents upon the release of the half-year results, and then the selling came in, drove the share price all the way down to about 5 cents, and the selling continued into the next few trading days, and in fact the share price is now 4.5 cents, which is comparable to the day before the company released the half-year results. And we have seen this selling happen about 3 or 4 times in the past year and a half. So that is something to be mindful of, that if the company releases another really positive announcement, there might be more selling coming in on that day. Now, the best way to fix that is if the company remains profitable, if they increase their revenue over the next few half years, increase their cash flow, declare a dividend, that sort of thing. That will drive out the short-term traders. Maybe not drive them out, but that will bring in fund managers. And fund managers, when they see the share price pull back, like we saw with Rectifier Technologies, they will start buying and they will prop up the share price. So that is what has or needs to happen with Rectifier Technologies. We need to see more fund managers interested in this company moving forward. But if you take the longer term view of Rectifier Technology, the share price is slowly moving up. It's in this upwards trading channel. So this particular weekly chart goes back to 2016. So back in 2016, the share price was really low. It was 0.5 cents. And even in the weekly chart, you can see occasions when the market gets really, really excited about the company for a very short period of time, and then the selling comes in. And the last time the share price the market was really excited about this company was back in early 2022 when the share price almost got to 10 cents. And then we saw the share price pull back from almost 10 cents all the way down back to 3 cents, which was crazy selling for a company with the amount of promise this company has. But if you maintain your holding in this company for the long term, there is a chance the share price will move up, particularly if the company fulfills on their promise. Now, that's not necessarily going to happen because there is still a lot of risk when it comes to Rectifier Technologies, but it is looking promising, and they've taken the first significant step by being significantly profitable in this particular half year. Not only significantly profitable, also free cash flow positive. So the very fact that they are free cash flow positive and profitable in the half year, that's the main reason I've taken a small position. And if the company continues on this success road or this road to success, I will add to my position in the future. That's all I have for this look at the half-year results for Rectifier Technologies. If you have any thoughts, any questions, anything to say about this company, I'd love to hear it. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.